Okay, welcome everyone. We'll start our fourth lesson, is management accounting. My name is Anjum Satar. If you have any question, feel free, just drop me email. So I'll get back to you as soon as possible. So we'll first recap what we learned up to now in previous lesson. So before starting our today lesson, we'll recap what we learn up to now. So in management accounting, we have learned up to now the M of this unit we discuss as well. 4 learning outcome we have. We discussed during first lesson, demonstrate understanding on the management accounting system. I discussed with you apply range of management technique. Last lesson I explained you use of planning tools and used in the management accounting. So uh, first lesson we discuss about management accounting. What is the management accounting? What is the management? I explain you management is the process of designing an environment to achieve our organization objectives. So management accounting his job deal with the planning, controlling, implementation, organizing all the management functions. So accounting itself is a systematically record. So we do recording in terms of the costing, and then we'll make the decisions from these costings. So we discuss different costing methods as well. We discuss about role of management accounting. So please is on Moodle we have this book as well. So I refer you couple of the chapters to read. So please carry on doing so when you prepare your assignment. So please we need to go through and to clear your concept. Please go through this book as well. So if you go through by chapters, so you will see there everything is covered which we supposed to cover. So chapter 1. So just 1 second, I'll show you as well. So what is management accounting? Yes, introduction, meeting the needs, internal users, function, role of management accounting. So all being discussed, which we discussed during our first lesson as well. Definition of cost, cost allocation, activities, output, variable cost, fixed cost, all this we discussed during our first lesson, all being explained within this book as well. So please go through and do a bit revision as well. Okay, then second lesson, I'd explain you all the costing systems. Like we discuss about cost card, we discuss about inventory management, we discuss last in first out, first in first out, and FCO inventory methods as well during our first lesson. Second lesson, I explain you again what is meant by cost. I discuss with you cost analysis technique, cost volume profit analysis, break even, which we discuss how we can calculate the break even. What is meant by break even is a point where no profit, no loss in the business. We discuss about flexible budget, the budget which carry on changing. If the inflation will increase, or the national minimum wage increase, or the other costing will increase, so our budget need to be increased as well. We discuss about difference between absorption costing and marginal costing. So absorption costing means full cost, where we include both fixed and variable cost. Marginal cost mean all the variable cost of production. We discuss fixed cost, it won't change. Variable cost, they change with the level of output. Cost we can allocate on different bases. We discuss about like you living in the small house, small room, and someone is living in the big room, and we need to allocate the energy cost, gas, electricity bill. So we can allocate on the basis of the area which we acquired and someone else acquired as well. So that's we can allocate the cost. We discuss about different allocation method. I mentioned you the cost variance, overhead variance as well. So last lesson we discuss about budget. Budget is a financial plan, why we prepare the budget, what are the budgetary control we mentioned in during last lesson. I mentioned you different types of variance again in the LO4 as well. We have a discussion which we need to be, if we look at inductive contents, all we supposed to be addressed. We discuss about normal costing, standard costing, how the costing system differ in the activity based costing, batch costing, and contract costing. I mentioned you PES, political, economic, social, and technological environment. I discuss with you SWOT. S stand for strength, W stand for weaknesses, O stand for opportunity, and T stand for threat. SW is the internal, and OT is external, which we discussed. We discussed Porter 5 forces, and I mentioned you please do a bit of research. I'm not sure a couple of you done or not, but we'll go through as well today's lesson. So LO4, compare ways in the organization could use management accounting to respond financial problem. If we have a financial problem, what management accounting can do? Okay, any question up to now?
No, sir.
Okay, let's so today lesson will be focused on all these inductive contents are the key points which we're supposed to learn. So unit 5 management accounting, my name Anjum. We'll start. What do you know about budget? Any thought about budget?
Yeah, budget is we allocate the amount, I think, for future any expenses, expenditures, and all these things. We put some amount for some specific work we do, I think. Um,
Good. So budget is a financial plan where we want to
Plan,
be.
yeah.
So where we are now, where we want to see ourselves. So if we don't have a budget, we can't achieve our organization objective. So budget always need to be linked with the organization objective. We want to be maximize our market share. We want to sell more goods. We want to be 100% customer satisfaction. So for these all purposes, we need a budget for it. Yes, we need a money for it. So that's what's come in your mind, budgetary control. What is meant by what sort of control?
Well,
So budget is a financial plan.
Plan, yeah.
So budget is a financial plan. Budgetary control is a control our budget won't waste it. Yes. So we always measure the performance, what we budgeted, what actually we have. And we always look economic factor as well, which we discuss political, economic, social, and technological. If those change, our budget can be changed, our variance will be different. Okay, next performance. What's come in your mind? Performance. How we can measure the performance?
Hello?
In our sorry.
Yes. Yeah, sorry.
So performance. So okay guys, whenever you measure the performance, always try to measure in 3 areas. Any performance you want to measure. So performance in term of quality. So in term of cost, in term of time. So how much time somebody took it, how much cost us, and what the quality and the quality of the product, is how much is product being wasted or rejected or the customer satisfaction. That's all come under the quality. So quality needs to be improved, cost need to be minimized, and the time need to be reduced. So that's all come under the performance. Okay, LO4 ways in the which organization could use the management accounting to respond the financial problem. Financial problem. What sort of financial problem? We have no cash or oblique low cash. Low cash balance we have. So what we can do, how we can solve it. So look around the credit management. Credit management mean receivable days. So money we receive from customer, receivables from customer, try to reduce. So that will improve our cash. Supplier payment. So which we call creditor payments, creditors. So we should try to negotiate with supplier Sorry, for negotiate with the suppliers to suppliers to increase payment terms. So that's we. So these will help us invoice discounting. We have invoices, invoice discounting. We have an invoice we're supposed to receive money. We give to the any private company that will help, or we can look around outsource. Like in the outsource, IT centers maybe is costing us more, and outsource will help us to reduce the cost. So ultimately, problem in a financial problem, we need to respond how we can reduce, how we can solve it, those financial problems. Guys, anybody any question? If any question, please ask me. So performance measurement technique, financial and the non-financial. So financial, you're looking in terms of the cost, in terms of the revenue, in terms of the return on investment. Next, non-financial, where we're looking not just the monetary term, we're looking the quality, we're looking the customer satisfaction, we're looking the social responsibility. Balance scorecard is a techniques where we need to be balanced all in terms of the financial perspective, customer perspective, environmental perspective, all we'll go through. Benchmarking. Benchmarking is a key performance indicator. So you need to measure against the industry benchmark our performance. So always we need to look around. Ratio analysis is also the performance measurement. So we need to look around, which we'll go through. Okay. Balance scorecard is quite popular concept which we use in management. It's a help, so when we'll make the management strategies, we'll focus financial perspective. We can set the financial goals and we can put the measures. Customer perspective, we look the customer, what goals we have to maximize sales, maximize customer satisfaction, reducing the lead time, delivery time. So all this is a customer perspective. Internal business perspective, we're looking in terms of the business operations, need to be smooth with training and development, staff retention, improvement, all this come under the internal business perspective. Learning and growth perspective, new innovation, new software. So that's all come that can be goals and ultimately measures we need to be in place. So when creating a balanced scorecard, we need to write the goals, we need to put the measures in that. So that's we can. Okay, balanced scorecard. So translate the strategy. Strategy means the action plan into the operational term. Align the organization to the strategy. Make strategies everyone's everyday job. Make strategies a continual process and mobilize the leadership for change. So this make the balanced scorecard is a tool for forward planning. So for forward planning, we can use this tool for change as well as the being retrospective so views of the past performance. An important aspect of the using balanced scorecard is the involvement of employees in all stage of the setting the scorecard and monitor the outcome. Is a flexibility, so the balanced scorecard can be designed relevant organization, its operation or procedures. So when we're looking the balanced scorecard, it's a lot of criticism on the balanced scorecard. Is attract some criticism. It is biased toward the shareholders and fail to give adequate attention to the contribution of other stakeholders, particularly employees, suppliers. I believe it does not give attention to the role of employees. It fails to consider the aspect of human relation with the organization. The balanced scorecard cascades down the organization with the little involvement from the senior level managers, and this may lead to the employee dissatisfaction. It does not help the organization to define the specific performance and does not help define how the performance. So there is a criticism of this approach, balanced scorecard, and the benefit as well. So anybody, any question, guys, up to now? If you have any question, okay. In our organization, CSF, what is the CSF stand for? Critical Success Factor and Key Performance Indicator. So competitiveness, we need to make sure in our organization our product be competitive. Our cost will be minimized. That can be a problem in our organization. So we need to be focused. Sales growth by the product and the service, measure the customer base and relatively shares in the position. Resource utilization, we need to focus efficiency, measurement of resources planned against the consumed, measurement of the resources available, those used, productivity measurements, quality of service. So quality measurement is every unit, evaluate the suppliers on the basis of the quality, number of customer complaint received, number of new accounts lost or gained. Customer satisfaction, speed a response to with customer environment, informal listening by calling certain numbers. Okay, anybody any question up to now? Okay, so customer satisfaction, we need to look around as well. Okay, next we have our inductive content, corporate governance. What is meant by governance? So in our organization, to solve these problems, whatever the financial and the non-financial problem we have in our organization, so management accounting is need to be, corporate governance is need to be in place. So governance is the system by which the companies are directed and controlled. It covers the topics such as how the power is divided between the board and the shareholders, accountability of the board of the members, rules and procedures making decisions, provisions of the control for the companies. Corporate governance provides the structure through the company's objective are met. This means attain the objective and monitor performance. So there are the different structures is being recommended in different reports. Different people gave this. This is can be used in the financial accounting as well, but in the financial accounting is compulsory, but in the management accounting we can choose as well, but not compulsory. Set up by the Financial Reporting Council and then Stock Exchange. Objective help to raise the standard and the corporate governance and the level of the confidence in the financial reporting and audit. So publication recommended, we is always desired to be help, to solve the problem in the organization. So then 1998 combined code reports came, and this was the Cadbury, Greenberry, and Hamble. Is all these reports name is always it's the all these reports. The purpose was to be improve the financial stability in our organization. Turnbull reports, Higging reports. So these are different reports. So we don't need a lot of focus on these, but these are quite useful to use in our discussion in our assignment as well. So fixed budget and control. Fixed budget. So we have a budget, budgetary control. So last lesson I discussed with you different types of budget, and we discuss about when you want to make a budget. So first step in your preparing budget, sales will be the first step. You forecast the sale. If you know the sale forecast, you can may prepare the all other budget. So first we'll discuss now budget is the revenue. We have what we budget, what we actual. So if our budget is more but actually is less revenue we generate, with less sales we have. So now if we have a less sales, so what will be happen? Hello, okay, welcome back. So let's the revenue. Welcome back. So we have revenue and budgeted and actual. That okay. So budgeted and actual. Last lesson we'll learn about if my budget revenue, my sale budget was 1,500,000, and my actual sales was 1,75,000. So I have a difference between them. Actual my sales was less. That's not in my favor. So my variance will come adverse. Then we discuss material variance as well. So our material variance, we budgeted 375,000, actually 31750. So my variance will be, we budget more, but actual cost was less. We use less material, so my variance is in our favor. Labor, we budget labor cost will be 450,000. Actually, we have 351. 500, so we have a variance is favorable. F stand for favorable, A stand for adverse. So production overhead mean the not budget that's directly involved in the production, but is a part of, is part of our uh, in the day in and out. We need to make a budget. Okay. Anybody any question?
No, sir.
Okay, so we have budget and then we discuss flex budget, the budget which we need to flex it. Always you think if I am comparing the performance of 100 people with 200 people, it's not. If I'm producing more unit, it should be my cost more. Yes, if we are a more serving we customer, we supposed to be. So first always we need to set the standard, then we need to flex it. So if activity levels increase or decrease, so our budget need to be increased and decreased accordingly as well. So our sales will increase, our material cost will also increase, but we need to see how much is increased. So my sales increase, so our budget need to be increased as well. So in this we have an example. So flex budget means the budget change. I guess flex is flexible. So we have a sale budgeted sale, actual sale, we have a difference is a variance. So my actual sale is less than the budgeted, the variance is adverse. My material cost is budgeted and then my actual cost is more, so that's why my variance is adverse. Labor cost and my actual cost, so my variance is adverse. Factory overhead, I budget 130, but I spend it 117,500, so variance will be I am saving, so that's why variance will be in my favor. So all these different types of variance we can look around, that's a control in our organization. So budget is a control. Budget provide a financial control. So if we don't have a, then we can discuss about the reasons why this variance has happened. Sometime is a material variance. If we have a variance, material variance, favorable variance, unforeseen discount we receive, currency becoming stronger when we are buying in different currency, the variances will be in our favor because the cost of the material will be reduced. Labor, if we have a lot of labor supplies available, lot of people unemployed, of course, the labors will be shortage and the sale cost of the labors will be increased. When the lot of labor supply is available, what will be happen? So the cost will be dropped. So what we budget, we maybe we're spending less. So the variance can be favorable. Okay, overhead saving in the cost, always we looking to bring efficiencies. Overhead cost that's not directly involved but indirectly cost. Maybe we can outsource, like IT department is the overhead cost. Admin, we have a lot of, now we have introduced automated machine, so that will reduce the cost. Any question?
No, sir.
Okay, then we have a variance, adverse variance. Those are not in our favor. The causes can be the price increase. When the price increase, the cost will be more, and ultimately variance will be higher. High inflation, of course, like a fuel price is increasing, the variance will be. The labor rate, national minimum wage used to be £7.85, no £8.10, 15 pence. So now the labor cost will increase. The variance will be adverse because we budgeted based on last year, now is actually increased. So that's its reasons for adverse variance. Then we're looking compound interest. What is meant by compound? We heard about?
Don't know, sure.
Okay. Let's say you deposit money in the bank. Yes.
Yes.
So you deposit £100.
Yeah.
If you get 10% interest, so next year you will get £110 back, yes?
Yeah.
But if you don't withdraw your £10, yes, interest, your £100 will become 110. Yes, then we calculate
Yeah.
10% of 110. Yes, so
Yes.
then that will become 120 £1 next second year. Then you do again compounding. Yes, so carry on your compound. If you don't withdraw your money and you carry on getting interest on interest, yes, so that's called compounding. So
Okay.
we looking the compounding in different perspective, and we can use the compounding interest concept. Like, you can fix your money 5 years in a bank. So bank not give you every year's money back. You're not withdrawing every year. So until 5 years, in 5 years your money is double. Yes. Why double? If you calculate, it means your compound carry on money is compounding. Yes.
Yeah.
Compounding means total. Yes. Interest on interest. Yes. Okay, next when we looking the performance or in the management, we always do investment appraisal. Investment appraisal is a technique which we can appraise. Like, we want to invest in different projects. We're looking how long the money you will invest, how long will it takes you to cover the money. If I'll say, you invest £100 and you get £100 back after 2 years. So what do you think? Is £100 now and £100? Is it £100 now is more value, or £100 you get after 1 year is more value?
I think the now more value.
Yes. So if the money, if you have now, you have a lot of option to invest. The money you will get in future is a less value. Yes.
Yeah.
So always we looking. If I'll say, let's say somebody say, if you give me £100 next year, I'll give you £105. Yes. So you thinking, oh, hang on a minute, I'm giving 100, I'm getting £5 extra is good. Yes. But you need
Yeah.
to think about £5 you're getting extra, but 3% is the inflation. Yes. 3% is inflation. You're missing your opportunity to invest somewhere else as well. You're bearing the risk as well in the business. So if you're just getting 5%, why not to invest or deposit money in the bank? They will maybe give you 3% interest. So we're discounting, and we're looking what will be the real value of £100 in a year. Yes. So we call depreciate our money. So if I'll say 6%, yes.
Yeah.
So if I'll reduce my value of money 6%. So if you're getting £10 now and £10 in 1 year's time, actually your £10 won't be £10. Okay. Like I give you example, we use discount factor. Discount, if I'll say, can you divide 1 divided by 1.06? How we can write 10%? So let's see, 6. What is meant by, if you want to write 6%, how we can write in math? It's called 0.06, yes?
Okay. 0.06.
Because 6% mean, it's not a point. If it's a 60, it's a 0.6, yes?
0.6. Yeah.
If it's a 10, it's a 0.1.
0.1.
If
Yeah.
it's a 20%, it's a 0.2. If it's a
0.20.
6%,
0.2. Yeah.
if it's a 6%, it means 0.06, yes?
0.06.
So let's say you divide. If I'll say 10%, my value of the money will decrease every year. So what will be? So let's do 1 divided by 1.06. 1 we have in the formula. We use this formula. 1 divided by 1 plus R. R is called discount factor. How much we discounting? How much value we are reducing the money? Yes. Based on different economic factor. We'll say inflation is this. Bank, if I'll deposit money in the bank will give me 2%. So I need more than that. Yes. So I'll use this technique. It's called investment appraisal discounting cash flows technique. So what will come? Our answers 1 divided by 1.06. Do we know what answer will come? It's come 0.7473. So it means the pound you have now, in 1 month, in 1 year's time, that 1 pound will be 74 pence. Sorry, in 5 years, that 1 pound, you know the 1 pound, if you have now 1 pound, and somebody will give you 1 pound after 5 years, yes?
It will be equivalent to 73 pence. 74.
After 5 years, it will be 0.74. Yes, it will be mean. It will be, if you want to check after 1 year, so we can, we'll use the calculator. Okay, I'll show you. We said, can you see on my
31% or something.
Okay, 1
kind of.
Can you see now? 1 divided by 1.06. So after 1 year, 1 pound will be 0.94 pence. Yes.
Yeah.
Carry on dividing with 1.06. After 2 years, it will be 89 pence. Yes. If you get 1 pound. In third year, it will be 0.83. Yes. After 4 years, because every year we're depreciating. Yes. It will be 79 pence in 4 years. In 5 years, they gave us, yes, 0.74. So in 5 years, this 1 pound value will drop down further to 74.73. Yes, that's meant by. So if somebody say to you, you invest and you will get 100,000 after 5 years, yes. So 100,000 times, let's say you have invested 80,000 and you're getting 100,000 back after 5 years, yes. So if you're getting 100,000 times 0.7473 pence, 100,000 if you're getting, actually real value of 100,000 will be 74,730 pounds. You getting me? So if you have 100,000 today and 100,000 in 5 years, so that 100,000 pound value will be only 74,730 pounds, because 6% if you decrease the value. If the currency value decrease, that's why the people hate, to deposit money in banks, because the bank always giving low interest rate, the depreciation of money. Yes.
Yeah.
So really, we are getting more money. Really, we are losing, not gaining. Okay.
Yeah.
Any question?
No, sir.
Okay. Next technique, we have an internal rate of return. So we're looking what value, what cost us as a project, what we'll get, out of it. So what will be the real value in 5 years, in 10 years? It cost me 20%. If I'm not getting more than 20%, is no benefit to invest in the business. Yes. So that's we calculate by using this formula, which we'll go through some point in another lesson. Okay. Payback period. Payback period is a period. If you invest 100, how long will it takes you to cover the 100 back? Payback. What do you invest? How long will it takes you to cover the money? Like, some saying, oh, you invest 100,000 in a food business, maybe in 2 years you will cover, or in 5 months you will cover whatever your 100,000 you invest. Yes. So that's the payback period is very less. But in some businesses you have to wait a lot. So payback will be. So we are always looking option in a business. Okay. So like investing money in education, so we say if you get the good job in 5 months, you will earn this money. Yes, so payback is quite short. But it's not mean payback will finish, so you carry on for the knowledge never destroy. Yes,
Yeah.
knowledge is carry on. Okay, so that's we always using the payback concept. Next we looking in business when we looking the performance. Always we need SBUs. SBUs mean the business stage. If you look at the Ford, how many model Ford have? Ford cars?
Ford.
How many makes Ford? Ford Fiesta, Ford Motor,
Couple.
Ford Mondeo, Ford Fiesta. So
Ford Focus. There are many. Yeah.
each Ford model is called SBUs, one business unit. Yes. So we use the word strategic business unit is mean each Ford model is one business unit. Yes. So maybe
Yeah.
their one car is giving them more return, one is giving them less. Yes. And
Yeah.
the budget we can say Ford Fiesta budget itself is a Ford is an organization. Then each the unit we can say each model they have own budget. Yes, a own performance we can own strategies we can different promotions, different marketing techniques we can use. Yes, for different
Yeah.
cars. Okay, so that's it called business unit. We can look around the market base. We can customer type, product, service, competitor. Who is competing with Ford Fiesta? Who is competing with Ford Focus? Yes. So that's why we always looking capabilities. What is meant by capabilities and competencies? We heard what is meant by capabilities first.
Um, for example, in the car, what features they have, or high tech.
Okay.
Yeah, this way.
Okay, let's say you pass your driving test,
Yeah.
so you're capable, yes, because you can drive,
Yeah.
but you're not a competent. Competencies come with experience.
Experience. Yes, true.
So that's why nowadays is organization they always do interviews based on competency based interview. There is a method, it's called STAR method of interview. Whenever you go for any interviews, it's good to watch STAR method of interview. STAR stand for S is what's your strength. Always they're asking what threats you face, what action you took, or what result. Yes.
Yeah.
So that's called STAR method of interview. Yes. What was the task when you exceed it, when you not achieve? So that's they want to explore about what you're saying is right. You're competent as well or not. Okay. They check the competence. Okay. Next
Yeah.
we're looking the one of the strategies Porter gave. His name was Michael Porter. He mentioned strategies we can use cost leadership. Like you're a leader in the cost, you are producing the lowest cost of the product. Like Ryanair is offering the cost leader. Yes, they
Yeah.
are they're offering cheaper goods than anybody else, cheaper flights. Yes,
Yeah.
so that's the cost leader. Like a Primark, they are the cost leaders. Everything selling less than others. Cost focus,
They sell more. Yeah.
they sell more. So cost focus is you just focus one area of the cost, not a whole organization. Maybe one product we are making really cheap, yes, but not all.
Yeah.
So that's called cost focus. Differentiation. Differentiation mean everything we are making totally different than our competitors. That's called differentiation focus. Okay, that's the strategies we can use. We are using totally different colors, we are totally different product. That's called differentiation focus. Differentiation focus is just one area. Maybe you change the packaging, yes, but the taste and the weight will stay the same of the product. So to gain the competitive advantage, because we want to differentiate ourselves to be gain the competitive advantage. Competitive advantage means you have advantage nobody else has. Like every country, every nation, every company has some competitive advantage. Like in some country they have a competitive advantage. They have a 4 types of weather. Some country they have a advantage. They have a lot of mineral and resources. Yes.
Yes.
Some country they have an advantage. They have a knowledge-based economy. They have a good knowledge about the things. Okay. So
Yes.
that's called. Okay. Next strategy we can use in business is called strategies clock. It's like a clock, you're looking where you are now. Like on the clock, we can say, okay, sometime you're a differentiation, sometime you're a hybrid, you're very innovative, sometime you're a totally differentiation, sometime you focus on the low price, yes, sometime you may be totally failure. So on the clock, different strategies at the different times you can use to become a successful in the business. So in a management accounting, all these strategies we can use as well. Any question?
No, sir.
Okay. Strategic business unit always try to have a unique cost structure. We're looking how we can reduce the cost. We're looking how we'll bring the capabilities. We always looking intangible. What is meant by intangible?
Um,
Intangible. We can't see it. We can't touch it. Like the goodwill reputation of the company is intangible. Yes. We So still we need to
for
be
example,
active. Sorry.
sir, any example for intangible?
Yes, like Nike. You know the Nike,
Yeah.
right? So what is Nike? You know the sign, good sign. Yes, Nike's logo. How much
Yeah.
worth of? Do you know how much is the worth of?
Oh, it will be too much. Don't know, sir, but it will be.
Is more than 5 million, 4 million. Yes,
Could be, yeah.
4 mi. Sorry, four around 3 to 4. It's more than 1 billion. We can say, yeah, definitely. Okay, more than 1 billion pounds.
Yeah.
So more than 1 billion. So that is the logo itself is a goodwill, yes?
Yes.
Copyright.
Okay.
That's the intangible. We can't see it, but it's a worth of. This is the asset. Any company, any clothes, you put the Nike sign, it become a Nike. Yes, people have a trust on it.
Yeah.
It makes sense? So if we'll do the bad thing, we're not the good quality, we give contract to somebody and they use the child labor. Yes. So that can be intangible asset can be revalued. Yes. Their value can be dropped. It makes sense?
Yes, sir. That's
Always we're looking switching cost. If somebody can change broadband switching cost. Okay. Always we're looking these things in when we'll make strategies. Huh?
yeah.
Okay. So decide an organization, think about the competitors. We can think about who compete and then how we're going to deal the threads, in our organization. Always we make the strategies. Always we're looking SBUs, how much is the competition. Hyper competition mean very high competition between organization. We use cooperative strategies, how we can game, like a game, when you decrease the price, you increase the price, I'll increase the price. When you do, different months different, so that's we can use different strategies. So these are different techniques, different strategies we can use in a business. Okay. Any question?
No, sir.
So one of lesson I already discussed with you, I think so, relevant cost. Any new decision we'll do or any new project or the product we launch, we are looking how much new cost or additional cost will be. So that's called relevant cost. Yes.
Okay.
So we use the word relevant. We use approaches, limiting factor. What is meant by limiting factor?
If I look at the total scarce sources, so
Limiting.
Limiting. So calculate how
Okay.
much resources. Okay.
Yes. So any business we need 3 M's. Do we know 3 M's?
3 million. Yeah. What?
No,
3
no.
M.
Any business you start, you need 3 things, 3 M's. You need money,
Okay. 3 M. Yeah. Yeah.
you need material, yes. This means asset, different types of inventory, yes. And you need manpower, yes.
Manpower. Yeah. Okay.
So you need people, yes.
3 M. Money. Okay. Never heard this before.
So money, we need 3 M's always, when we start a new business, we need money, yes. If we don't have a cash, we can't buy the thing. We need
That's the start.
building
Yeah. First.
material or asset, and we need manpower. Is meaning we need some people, some human being as well, yes.
Yeah.
Even is a one. Okay, so thus we can discuss. So that can be limit. Sometime we have a limit in money. Sometime we have a limit in stock. Sometime we have a limit in. Okay,
Manpower.
sometime we have a manpower. Yes, we have a limited labor hours available. So we need to make sure we'll use effectively to get maximum output. Yes. So we use the workforce. Like we selling the product. So our workforce should sell more return ones, like we'll sell, the brand which give us more returns, huh?
Yes.
Any question?
Of course. No, sir.
So that's meant by limiting factor because we have a limit on it, but we can make sure. Okay, then when we make the decision, any decision we're looking, sometime we'll making decisions either we'll make ourselves or we'll buy it. Like the railway engines, if we want to be, maybe is cheaper to buy it, maybe expensive to manufacture it. Yes. So we need always looking, is it good to be buy it or manufacture ourselves? Yes. Always we looking the cost. Shut down, if we'll shut down the business, always is a cost involved as well. Yes. We need to look around the mechanization, accept it, reject it. In terms of the cost, we're looking if any decision will make accept or reject. We're looking further processing. Sometime we're looking various other new costs that happen as well. Any decision we'll make, we always looking these things. Any question? Any question?
No, sir. No.
Okay. When we'll make any decisions, yes. So let's,
Yes.
I'll give you a little example and then we can summarize our performance, yes. Let's say you want to measure the employee's performance, yes.
Yeah.
So how you measure the performance? You saying somebody is using less time, yes.
Yeah.
Somebody is charging less money, yes. Cost wise is
Yeah.
less, and customer satisfaction when you're dealing, the quality of
Quality.
service, yes. So always we measure the performance in terms of cost, time, and the quality. Does it make sense?
Does, sir.
Okay, so qualitative factors, when we're looking sometime in the quality, we're looking in our organization is wonderful. We are earning profit, but the staff is very intense. They don't want to stay. They're not, their moral level is not high. Yes. Whenever they
Yeah.
get the chance, they can leave us. Impact on the employees' morale, alternative use of resources, quality, reliability, competitor reaction, customer reaction, loss of the special skills, confidentiality. All these are the qualitative factors we need to keep in mind when we calculating or when we making any decisions. Yes.
Yes, sir.
Okay, that's all. So today lesson we just learn because today lesson is your LO4 is quite very base, very generic. it various things we discuss benchmark. Benchmark is mean the industry averages, yes. We discuss variance.
Yeah.
We discuss, some financial governance, yes. Different governance mean, yes, corporate governance, financial governance, how well we manage fund and use funds. We discuss some effective management accounting techniques. We discuss different strategies we can use in our organization, yes. So that help us to use and maximize our return. So that's all the learning outcome being addressed, and that was we supposed to do. So please, all this being explained in the chapter from the book. So please, if you go through the book, so
Yeah.
chapter 13 in your book is cover up. Okay.
Yeah.
So chapter 8, chapter investment appraisal, I mentioned you chapter 11. We can appraise. Chapter 12 is about budgeting, which we discussed in the last lesson. Chapter 13, purpose and the nature of the budget system. Yes, why system need to be in place.
Yeah.
Where we can measure the performance. Standard costing we already discussed. Performance evaluation, yes. So we discussed performance. So this chapter is quite mixed up, good few places we can. We discuss asset, we discuss strategic, yes. It means competitive advantage we discuss, and we discuss balance scorecard as well. Okay, so that's all
Yeah.
been covered. Any question?
No, sir.
Okay, so we'll try to do one recap lesson on assignment brief, which I'll go through in the lesson assignment, how we can address learning outcome within assignment. So that will keep, up to next lesson. Okay, so guys, today we'll just learn about the budget, budgetary control and performance. We discuss about when we're looking the performance, we discuss about the financial, non-financial, and balance scorecard and the benchmark. I explain you what is meant by and if how we can respond to the financial problems if we have in our organization. Performance, we look around our strategies, can look around our organization objective. We can compare with the benchmark, industry averages, why our averages drop down, we need to be maybe outsourced, we can look around all possible options. So that's all we discussed during our lesson today. So hope so I'll speak to you all next lesson. Please, if you have any question, drop me email and I'll get back to you as soon as possible. Have a nice time and hope so I'll
Thank you.
speak to you all.
Thank you. Thank you. You too.
Thank you.